Nesto Academy, expert advice for every mortgage. If you own a home in Canada, you may be sitting on more financial power than you realize. In the next few minutes, we're going to break down exactly how a home equity line of credit works, how it's different from a regular line of credit, and why so many Canadian homeowners are using it as a smarter way to borrow. Before we talk about borrowing, let's talk about equity. Every time you make a mortgage payment, a portion of that payment goes toward paying down the principal, meaning the actual balance you owe on your home. At the same time, if your home's market value goes up, the gap between what your home is worth and what you owe grows even wider. That gap is your home equity. It's the portion of your home that you truly own. And in Canada, where home values have historically risen over time, many homeowners have built up significant equity. A home equity line of credit, or HELOC for short, is a revolving credit product that lets you borrow against that equity. Think of it like unlocking a portion of your home's value as a flexible pool of funds you can dip into whenever you need it. In Canada, lenders will typically allow you to borrow up to 65% of your home's appraised value through a HELOC. So the more equity you've built, the more you may be eligible to access. Here's what makes a home equity line of credit so flexible. Unlike a traditional loan with fixed payments, a HELOC works more like a credit card, but with much better terms. You're approved for a maximum credit limit. You can borrow up to that limit whenever you want, repay it, and borrow again, without having to reapply. You only pay interest on the amount you've actually borrowed, not the full limit. So if you're approved for $100,000 but only use $20,000, you're only paying interest on that $20,000. Most HELOCs in Canada have a variable interest rate, meaning the rate can fluctuate based on your lender's prime rate. Payments during the borrowing period are often interest-only, which keeps your monthly obligations low, though you can always choose to pay down the principal as well. Now, what's the difference between a HELOC and a regular line of credit? It comes down to one key thing: security. A regular unsecured line of credit is not tied to any asset. Because the lender has no collateral, rates are higher. You might see rates anywhere from 8 to 15% or more, depending on your credit profile. A HELOC, on the other hand, is secured by your home. That security gives lenders confidence, meaning lower rates. Rates often sit just above the prime rate, which in Canada has historically been far more affordable. The trade-off, of course, is that your home is on the line. If you fail to make payments, the lender has rights to the property. A HELOC is not the same as refinancing. Refinancing changes your mortgage. A HELOC is a separate revolving line. Canadian homeowners use their HELOCs for all kinds of purposes. Home renovations are one of the most popular, because improvements to your property can actually increase its value over time. Others use it for debt consolidation, rolling higher interest debt like credit cards into one lower rate product. It's also commonly used for education, a down payment on an investment property, or emergency funds. Because you control it, a HELOC can serve as a powerful financial safety net. There if you need it, silent if you don't. A few things to keep in mind. Interest rates are variable, so your cost can increase if the prime rate rises. Because it's revolving, it can be tempting to borrow more than you need. Having a clear plan for the funds helps. And remember, your home secures this credit, so staying on top of your payments is essential. Is a HELOC interest only? Often, during the borrowing period. Is it risky? Yes, without a repayment plan. Is it cheaper than credit cards? Usually, but rates vary based on prime. So, does a HELOC make sense for you? The first step is finding out how much equity you've built. A licensed mortgage professional can walk you through your options and help you make the right decision. Call us today or click the link below to get started. Don't forget to like and subscribe for more mortgage tips.